Okay, this is take two of me recording this because I just looked back at the last video and the quality is so bad I can't even post that shit. But today I'm looking through fair value gaps and I'm showing examples of it, why it's useful, how it works, everything like that. So again, I'm not a teacher, I don't know much about this, but I'm just showing examples of how it works and then proof. So you can kind of see it actually working on the charts. Hopefully the quality is better on this one. So we're going to 1 hour. Oh fuck. Okay. I was looking at these charts earlier because I was going to take a trade. Okay, so on the 1 hour time frame, we see there's the fair value gap there. Now I'll quickly explain what it is. So fair value gap is an area where there's no, it depends which direction. So for bearish movement, it's an area where there's no resting buy orders. So this movement here, and then in a bullish movement, okay, for this example, just say this is the fair value gap where there's no resting sell orders. So this gives the market movers an opportunity to either buy or sell because they know that there was no resting orders in the opposite direction. So they can kind of move the market by this. This is used as a retracement tool instead of like a confluence to tell you where the market's going to go. This is just a retracement tool. So look, you can see here that price moves into it and then goes back down again, moves into it, goes back down. And then if I had to take a guess, I'd say this one's going to go into it and then it's going to go back down. Just like that. So it's basically a free candlestick pattern. So you measure it from the, if we're going bearish, we're measuring it from the first wick, the bottom one, to the third one in the top wick. So this area here, from there to there. And I'll show you an example of another one. So we've got one here as well. So there you can see again the bottom wick to this one. You see price goes into it and then goes back down. This one is on the 50-minute and obviously high time frame holds high powers, so it is hit it, but clearly it's gone the opposite direction. And we have just, well, we're about to form another fair value gap there. So I don't know if you want to call this an inverse fair value gap, which I don't know much about yet. I know it's something that is quite useful and it can help you enter trades and stuff like this. Now I'll go over another one I marked out earlier. So we can see here, I made this one green. Obviously we can't see proof of this, but I have marked it out. So we see three candlestick pattern. This one's bullish, so you can kind of see. So for this one, it's the top wick of the first candle to the bottom wick of the third candle. This is for bullish movement. So if we see price go back into here, I wouldn't be surprised if it continues in that direction. But it's not always guaranteed, so you shouldn't just rely off that. You should also rely off break of structure and then continuation to the upside or downside. What else have we got? Okay, so technically we have got one here as well. So as much as it may not look like it, you can see, so there, price finishes there. You can see price draws into it, goes back up. Price draws into it, goes back up. And you can tell by the long wicks, so there was a lot of resistance. So there was, you can see that the buying power was stronger than the selling power. And you see price shoot up, goes back into it. And again, you see how all along this one, there's very long wicks. So you can see the fair value gap working there. And looks like, I did mark this one out as an inverse fair value gap. But again, I haven't actually done proper research into what it actually is. So obviously we see there's a fair value gap from there to there, but I also we were trying to mark out this bit was where there was both fair value gap. Some people call it different things like liquidity void, where there's lack of liquidity, or an imbalance. It depends what you want to call it, but I call it a fair value gap. And then again, you kind of see one here as well. Price draws into it, it continues up. So it's kind of more of a retracement tool. So obviously price did start to go down, and then we see a break of structure here, and see price continuing upwards. So you can see these are very good examples, and you can look on whatever chart you use, and you can also see exactly similar things like this. But like I said, I'm not a teacher. I'm in no way profitable, I'm no way experienced, but this is just what I know about what fair value gaps are. So I can look back on it, show examples of it and how it's actually working. But that's gonna wrap up for today. I'll possibly do another thing like possibly order blocks, liquidity or anything like this. No one's watching my videos yet, so it's hard to ask what people want, but that's gonna be it for now. Probably end up posting 2 videos today, but that's gonna wrap it up.